Congratulations on getting started on the next session of the Crypto Mastery Training. In this session, we'll cover the ultimate crypto portfolio strategy. And I will say something about this session. This is not designed for you to copy 100% the portfolio strategy that I'm going to share here. It's for you to get inspiration from and create your own unique portfolio strategy that works for you with your goals, your risks, and everything else therein. The other thing is that I've really simplified our portfolio strategy, and I'm sure I'll be adding more to this and explaining more, because one thing I didn't cover in here is what we do on our daily Bitcoin scalping, for instance, because that would just overwhelm what we're going to cover here, okay? So that's something to keep in mind as you go through this, but I think that'll be much more obvious as we move forward. So let's jump right in. First up, and I shared this before, I am not a licensed financial advisor in any way, shape, or form. This training, everything I say about trading cryptocurrencies, money, and life, or anything should not be taken as financial advice. This session especially, I'm not giving you financial advice. I'm not telling you how to structure your portfolio. I'm not telling you how you should buy things. I'm not telling you should even buy cryptocurrencies whatsoever. I'm just stating my opinion. I'm not a financial advisor, okay? So this is really important that you know that. I'm not a financial advisor. So let's jump right in. Well, first I'll say this. This session is going to feel like a seesaw of learning. And even the beginning session and all the sessions here initially will probably feel like a seesaw learning, meaning that you'll just be getting bits and pieces, and maybe I don't expand on certain things. And the reason for that is because I'm slowly introducing you into ideas or concepts that we will build upon and build upon and build upon and build upon. So you'll see I will go back to these concepts, but I just can't give you everything right away. I just can't share everything right away. These things have to be slowly kind of taught and slowly introduced. So a lot of times it will feel like we're going through a seesaw learning, but there is a rhyme or reason to this. There's a reason why we're doing it this way. I just wanted to share that just up front because this presentation or this session might feel like that a little bit. In this session, we'll talk about how to think about crypto trading. We'll also talk about why we never worry about when we buy Bitcoin. Never worry about it. I mean, we have a plan, but we don't worry about it. We just follow our plan. Short term, mid-term, and long term, we'll talk about that and why you should have a plan on each one of those. And we'll talk about fiat Bitcoin basis. I talk about that a lot, and I think for some people that might confuse, or I might confuse people on what exactly I mean, but it'll be really clear after this presentation. Alpha and beta basics. This will be very basic because to understand alpha versus beta, it's something that involves math and a lot of other things, but I'll give you a general idea so you know how to look at it. Example portfolio, and then we'll have examples. The other thing is there will be a add-on to this series as well that will include probably buying targets and stuff like that for Bitcoin. I am looking at maybe releasing this video kind of generally to people that haven't joined the training as well, but I will not be releasing anything else at this given time for that. So the buying targets, everything else will be in our membership and everything else. So let's jump in. Now, this is something that I'm going to go back to time and time again, and I think you're going to get really sick of me saying this, okay? But if you're investing in cryptocurrencies, if you're investing, period, it doesn't matter what. You're buying real estate, gold, silver, stocks, bonds, whatever you're buying, right? It could be, you know, the latest kind of craze that kids are into, and you're going to buy up the whole store, and then you're going to sell it later for a huge profit. You have to have a plan, all right? So that's critical. And I will start with this disclaimer. Creating a portfolio strategy is a very personal and specific thing. No one, not a single person, not even a highly respected or even a licensed professional, someone that will go to jail if they give you bad advice or they actually steal your money, none of these people will ever care about you or your money as much as you do. No one else. So if you do not care about your capital, if you do not care about creating a plan, no one else is going to do it for you. No one else is going to care as much as you are. And if you are buying into crypto without a clear and concise, well thought out investment plan, you will fail. Very seldom am I really unequivocal about stuff. And you've seen that probably in a lot of things I've said. But you might not fail today, you might not fail tomorrow, but at some point in the future, you will fail. Guarantee it. It's just the way it works. Obviously, if you bought Bitcoin when it was, I don't know, $100, and you bought $2,000 worth of it, it's really hard to fail then, right? Now, if you kept buying Bitcoin and you kept investing and doing and trading and everything else, you're on that path to failure. Most people that are in this training did not do that. I'd say I don't think there's anybody in this training that has done that, because you wouldn't need training. You'd probably be on a yacht somewhere, very warm. So that's something to keep in mind. All right. So one question I'd like to ask is, have you sat down and created a written and concise investment plan? Is that something you've done? How many people listening right now or watching this video have actually done that? Have you sat down and created a real written, concise investment plan? Not just, oh, I heard about this thing, I'm going to go buy that. Or Bitcoin sounds kind of cool, I'm going to go buy some of that and I'll sell it maybe here. Do you have a written plan? And more important, do you follow and update that plan consistently? Is that something you do? And even more importantly, let's say you have a plan. Let's say you've created a plan. Let's say you update that plan. Does your investment plan work? This is so critical. A lot of times people create a plan, and a plan sometimes is like, it's the first contact with the enemy line, if you've heard that in military jargon. Basically, in the military, you plan something, and you can plan all you want, but the second that the bullets start flying, all that goes out the window. Now, the value of having a plan is that everybody knows the objective. Everybody knows what you're going towards. And all plans, they don't survive the first point of contact. It's just the way it works. But the value of planning, and I'd say more in the financial world though, planning actually stands up more. So for instance, if you create a business plan, usually that business plan adjusts a lot by the time you hit market. With the financial plan, usually it doesn't adjust more, because you're looking at technical analysis, historical stuff, and if your plan is too far out of whack, you're usually losing money, and it's a serious thing. So it's the same way with in a military campaign. If your plan is so far out of whack that you're just you're getting tons of casualties and everything else, you're going to adjust your plan. Well, it's the same way with the investment plan. But does your investment plan work? You should always keep that in mind. You shouldn't just follow a plan blindly, and if it doesn't work, just keep following it and say it's going to work eventually. You should always be looking at your plan and asking yourself, does this plan work? What's telling me that it's going to work? Now, sometimes you might be down initially, and you have to really look at that and say, does my plan work, or is something off here? So that's something to think about. And this is something, a good analogy I always like to use, is that I find, especially a lot of people I've helped, there's been more planning going into a wedding than actually how much they plan in their investing. And if you think about it, and look, I'm a guy, so I would never enjoy planning a wedding, right? But there's just so much time and energy on planning something that usually costs a lot of money. And supposedly you do once your life, but most people do it a couple times, right? And so, but there's more planning that goes into that than a lot of people do in investing, and even in investing in cryptos, right? You're going to exactly plan the type of plates, the food, the dress, all the other stuff that goes into a wedding. But when people get into crypto or trading, they don't kind of go through that same systematic planning. They don't think about it that way. So I would suggest that if you've spent more time, even if you're a guy and maybe you haven't been as involved in planning a wedding typically, right? If you haven't spent as much time as someone plans a wedding, you should maybe think about, it's probably a good time to think about my crypto trading strategy, my plan. And let's say that that doesn't convince you, right? Do you think the smart money, do you think they don't have a plan? You think they just get up every day and they just kind of make their way to their office? Or I guess you could say the smart money, they think of it as a dungeon. You think they just make their way to the dungeon, or maybe the high office building that can oversee the whole city? You think there's just a bunch of people in that office high above the city that don't really have a plan? They just kind of got them and said, you know what? Oh, look at that thing. We're going to buy that. Oh, wow. Look at that. We're going to buy that. You think the smart money doesn't have a plan on how they're going to take your money? Do you honestly think that? So if the smart money has a plan on how they're going to take your money, you better have a plan on how you're going to actually keep your money and take their money. That's really the way to think about it. So if you have not created a plan, you need to create a plan. I know I'm hammering you over the head with this, but I've talked to many of you. I've helped people, and this isn't the exciting part. This isn't the real sexy, I'm going to put a trade and, oh, wow, it goes up 10%. Look at that. I made money part. This isn't the excitement, the adrenaline part, but this is the part that matters. So what does an investment plan have at a minimum? First up, I hate slides with bullets, but there's just sometimes no better way to do this. So you'll see I try to not use a lot of bullets and a lot of other slides like that. I just hate bullets, but sometimes it's just the best way to present the information. All right. So first up, an investment plan at a minimum. How much are you going to invest? You should know that. How much are you willing to risk? I mean, most people probably know that, but do you actually have it written down? Do you have it in a schedule? Do you say that, hey, I'm going to invest $1,000 a month for the next 12 months, and here's how I'm going to structure that $1,000 a month? Or have you just said, look, I got an extra $10,000. I'm just going to throw that in. Or maybe it's $500, whatever it is. I don't care what number it is. Does your investment plan tell you how much you're willing to invest? How often are you going to invest? Do you have an investment plan that says every quarter I'm going to put in X, or every day I'm going to invest X, whatever it is, or once I'm going to put in this much capital once, and here's how I'm going to use that capital, and here's what I'm going to do. What's your expectation of return? I don't think many people have thought about this, because most people just invest and say, well, it's going to moon, and I'm going to have a Lambo, and I'm going to go and retire on some island, right? Well, what's your expectation? What makes you think that? What's giving you that expectation? Is it the fact that you've seen Bitcoin rise from virtually zero to like $19,000? What is your expectation? And when are you going to take profits? Now, this is a big thing for investors. A lot of times they haven't planned when they're going to take profits. And I know some people, they take profits along the way, and that's good. That's smart. But also, things don't go up forever. Things have a ceiling. Everything has a ceiling. And of course they have a bottom, which is zero, right? If you're investing on margin or doing shorts, it could be beyond zero, right? So, or if you've borrowed your investment capital, that could be below zero too, right? So if you borrowed $100,000 on a line of credit or something, and you're using that to invest, you lose all that $100,000. That you're negative zero, right? So you need to understand when you're going to take your profits. How long is it going to take to get that return? Have you thought about that? How long are you going to be in the crypto market? How long are you going to hold this Bitcoin? How long are you going to hold Ripple or whatever else you own? How long are you going to hold it? At what point in time do you get rid of that return? I mean, how long is it going to take you to make the return that you're looking to make, right? How much time are you willing to spend to manage your investments? Time is the only asset that we cannot get back. Time is the most important asset you have. So how much time are you willing to spend to make X? That's another thing that people don't often think about. How much time do you actually spend reading tweets, looking at other people's TAs, looking at other stuff? And is that time exponentially helping you do investments that is getting you towards your investment plan, that is getting you to a successful investment plan. When and how are you going to do all this? A lot of people have jobs, families. I've talked to some people, they have a couple hours a day. Some people have maybe a half hour a day. Well, your investment plan, especially if you're planning to be an investor, you should say, when am I going to do this? And how am I going to do this? Not, if I have time, tomorrow I'm going to do it. Or if maybe I can fit it in this weekend. No, this should be part of your investment plan. You should actually know exactly the amount of time you're going to spend to commit to getting your expectation of returns, to getting your profits, because that will immediately factor into how long it's going to take. And this is a question that I don't think many people ask, but as a business owner myself, and if you're not a business owner or you haven't been an entrepreneur, you probably often don't think this way, but is it worth the opportunity cost if your time was put elsewhere? I think I've shared this before. I own a business, a software as a service business, but when I learned about cryptocurrency, when I really got it, I really canceled a lot of the growth plans I had for that business. I was still on path to do some of it, but I really got focused and involved in trading and cryptocurrency. I've always known I was a trader at heart, but I never jumped in. This was the time that I actually jumped in. And my assessment at that point in time was, it was kind of personal and also business. It was, is there an opportunity cost for getting into trading and investing and crypto compared to what I'm planning with my business? It was also a personal thing. I realized I would enjoy it a lot more. I still enjoy my business. I still enjoy a lot of the things I do there. But when I really thought about it, I looked at the opportunity cost for me at this point in time. I'm actually more excited about this, right? I'm more excited about crypto. I'm more excited about trading. I'm more excited about the things we're building. So that's something to consider as well. Is the opportunity cost of the time you're putting in really worth it? Or is there other things that you're neglecting that are worth it more, that you can get a bigger return on? So let's change gears here a little bit and let's talk about what you should do with your investment plan. A lot of what I've talked about here is probably, you probably heard a little bit of a bite in my voice, right? Maybe more than usual, because once again, I take this stuff seriously. My goal in this is to really ensure that you're taking it as seriously as you should be. The smart money on the other side takes it extremely seriously. Their goal is to get your capital, to get it as quickly as possible. So you should take this stuff very seriously. Now, one of the things that you should do is you should play the long game in crypto, okay? Any new asset class, crypto is a new asset class. You have a higher likelihood of success, a higher probability of success if you look at this as a long-term play, all right? I'm sure you've seen a lot of graphs like this, the early adoption, when people give up and all that stuff. This is, it's shaping up to be a new asset class, and it's a pretty interesting asset class because what it's doing is and I've shared this with a few people, is that anybody coming out of college, anybody that's an engineer, they're excited about this space, especially the younger generation, because twofold, or a couple of reasons. But first up is that it touches every piece of technology that's been developed thus far, except for maybe artificial intelligence and like virtual reality and stuff like that. But even then, it's starting to touch that, right? But it touches the internet. It touches the technologies that people use to build apps, to build mobile, to build the internet. And more importantly, and I don't know if I shared this before, it has a vision and a mission. And for the younger generation out there, this is extremely important. If you're a little bit older, it's not as important you don't realize how important it is that the things that they do, the things that they're attached to, have a larger vision, a larger mission. Cryptocurrency and the crypto market, to get involved in that, you're part of that larger mission. You're part of a change in the world. It's kind of the same way the .com came about. It was drastically going to change the world. Is it going to work? Who knows? Is this all going to come to fruition? Probably not the way that we're thinking about it. There was no, Amazon wasn't what it was when it first started. There was no Facebook, right? Google wasn't what it was. Apple wasn't what it was. There was, a lot of these things just didn't exist then, right? So the goal is that you have the long-term vision and you're using your investments and your experience here to make it through this whole curve, right? You're making money along the whole way, up, down, crash, out, and beyond. That's the goal. So you need to have that long-term thinking. So now we're going to go through a little bit of seesaw here the next couple minutes, and I'll share with you where we're going now that we've kind of covered the basics or the foundation of thinking about your portfolio, okay? Now we're going to get into the mechanics, okay? So the overview of getting started. So first up, and most, you probably understand this, you're going to buy Bitcoin and ETH LTC on retracements. That's going to create your basis. Now I'm going to get into detail of every single one of this, but I just want to lay the foundation of where we're going next. Next, you're going to take that Bitcoin and you're going to invest in alts. And your alpha better beat your beta. It better beat the beta. That's just the way to look at it. I'll get into that as well. You're going to sell Bitcoin when at profit levels. And I say you. Let me change the way I'm talking. We sell Bitcoin when we're at profit levels. So what I'm sharing with you is a simplistic view of our portfolio strategy that you can take inspiration from, okay? So we buy Bitcoin on retracements, we take our Bitcoin, we invest in alts, and we sell Bitcoin when at profit levels. And we also swing trade into hold assets and sell at capital and create free coins. Now, I borrowed this free coins thing from Quick Fingers Luke. That's why I first heard it, but I've heard it from other places. And his strategy is good. The challenge is that his strategy doesn't work too well right now. It does, but you just have to go through hours and hours and hours of his training to actually get to that point of where he talks about this stuff. So a lot of the things I'm sharing with you, I've borrowed from other people. Look, there's nothing new underneath the sun. So if you see that I borrowed things, yeah, of course. I don't know if I shared this before, but I go into all-out massive action mode when I get into whatever I do, and I borrow everything I possibly can from anybody else and other disciplines as well. I borrowed things from marketing. I borrow things from just anything that I have experience in. I borrowed to actually be successful in this, okay? So you want to day trade both the BTC and alts for account building. Now, some you don't have the time to do that, but I'll talk about it anyways. So that's kind of the way to look at it, right? So at an overview, this is what we're going to cover next. And before we jump into that, I actually do have to cover some things that I wanted to cover later, but you have to kind of understand these terms if you don't already, so that we can talk about how to structure a portfolio, how to look at a portfolio, right? So there's different trading styles. Now, now you might not be every one of these trading styles. It might not work for you, but at least knowing what they are will help you to devise a portfolio strategy that works for you, okay? So position trading is typically talked about when you're in a long-term trade, month to years. You're buying a position and you're going to be in that position for a while, okay? Swing trading generally is talked about. You get in and then you're going to only be in that position for days or weeks, okay? So you'll buy usually on a retracement or a downturn of the asset, right? Let's say Ripple goes down 10%. You're going to buy in that and you feel it's going to go up 15% from where you bought, and you're going to sell within 3 or 4 days at 15%. That's your goal. That's a swing trade, okay? Day trading, now this is a little bit different with crypto because it's a 24-hour market. There's no close of the market. So day trading, I look at under 24 hours. So a swing trade could be 24 hours as well, but day trading is maybe you enter a day trade tonight and then you plan to be out of that position within 12 hours, right? Some people think of that as a swing as well, but I look at it as a day trade. You're in that position usually under 24 hours. Most people say no overnight positions. Well, crypto's a 24-hour thing. So markets are always open when sometimes the market in the US is quote unquote traditionally closing. Asia is just starting, right? So day trading for me is 24 hours. Scalp trading. scalp trading is very short term. I also look at it a different way than I think some people as well. I look at scalp trading is that, let's say that Bitcoin right now is at 10,500 and you believe it's going to go to 11,000. You might get in at 10,550 and ride that up to 11,000 and then get out at 11,000. That's a scalp trade in my opinion. Okay. Now that usually is, I wouldn't say seconds or minutes, but it may be a couple hours, right? You could look at that as a day trade, but these definitions are interchangeable sometimes, but understanding what these are will help us kind of move forward in how I talk about portfolio building and everything else, okay? So first up, let's talk about where these kind of fit in the overall plan, though. The overall plan is that the first two, position trading and swing trading, are more for what we call free coin strategy or acquire and exits, okay? And I will get into the details of this, but just keep this in mind, as this is kind of those first two strategies where you're in the positions longer. This is really good for getting the coins that you want to hold long term, or for building what we call free coins. And you'll see that strategy here in a second. Next is day trading and scalp trading. You can look at these as account building trades, meaning that you're day trading just to build more BTC, just to build more to ETH. So you might buy something and you'll buy it low and then you're going to sell it higher, but you're not looking maybe to really hold that because, number one, the profit isn't there, but you're looking to just slowly build your account. You might just make 3 to 4%. But if you do that a couple times a day, 3 to 4%, it adds up over the long term, right? You're building BTC, you're building ETH. Same with scalp trading. Or if you're scalp trading Bitcoin, you're just building your fiat, right? You're building your fiat and building your fiat. So that's another way to look at it. Or that's the ways that we're going to talk about looking at this. One of the questions that I get is that, well, can I have exposure to the crypto market if I just do Bitcoin, Ethereum, or Litecoin? Yes. I know people that all they do is just trade or just buy, trade Bitcoin, Ethereum, and Litecoin every single day. That's all they do. Every single day they're trading that, and they do very well. Because it's in some ways you can say it's the cleanest way to get exposure to the crypto market. And when I say the cleanest, it's not that investing in alts is dirty. That's not the case. It's more that you can get in and out of fiat easily by just investing in these three. It's a little bit harder to get in and out of fiat through Ripple and any other investment that you do, right? It's just a little bit harder. Now, yeah, there's options. I understand that, but most of the alts, the alternative currencies, are traded on Bitcoin or Ethereum pairs, ETH pairs, right? So, and maybe obviously if you're on an exchange like Binance, BNB pairs, but you still have to go through a third party or a third asset to get to fiat. This is kind of unique to this market. You don't go and buy Amazon stock and then take that Amazon stock and buy Netflix stock, right? You don't go and buy Amazon stock and then go and buy IBM. You don't do that. But in this market, you do. You buy Bitcoin and then you go buy other things. So that's why if you're invested in alts, you're invested in Bitcoin. But you can just trade this. It's okay. That's perfectly fine. So don't, some people have asked me this. Yeah, definitely. It's awesome. And you should, and if you're just starting to invest, you will start investing more in these specifically outside of alts anyways, just because you're watching the market so closely. Anybody in the Discord group knows that we scalp. We take positions in Bitcoin, but we also scalp Bitcoin and Litecoin and other things because we're watching it so closely. Why not? Right? I'm watching Bitcoin so closely because it affects the alts so much that, well, why wouldn't I scalp Bitcoin if I can? Because I'm watching it so closely. I do suggest that everybody watch Bitcoin because it is the store of value in this market. So now we're getting into the meat of it. All right. This is how we currently buy Bitcoin and where we sell. And this works right now for us. Could change in a month, could change in a week, but this is what we currently do. All right. We update our portfolio strategy often. And here's what we do. We buy Bitcoin on retracements. We buy at 4%, 6%, 8%, 10%, 12%, 15%, and 20% retracements. Those are what we call our bases. Now I'll get into more of this here in detail. And we sell at 8 to 10% profit levels. This is how we buy Bitcoin. All right. That's why we never worry about how we buy Bitcoin. We have a plan. Of course, we try to maximize our entry, right? So if let's say there's an 8% retracement on Bitcoin right now, and we think it's going to go down another 5%, well, maybe we won't enter the 8% position. Sometimes we do anyways, just because you never know, right? You can do all the technical analysis you want. You never know if suddenly, I don't know, Alabama wakes up. Everybody in Alabama said, you know what? Bitcoin's a great idea. I'm going to go and buy me some Bitcoin. You don't know if the whole state of Alabama is going to do that. That might happen right at 9%. 9 might be a special number for Alabama, and it goes down 9%, and Alabama says, you know what? We're going to go buy Bitcoin. I don't know. For those that aren't in the U.S., the United States, I don't know, maybe another country. We'll say Belgium. But let's say everybody in Belgium gets up, and instead of going to 12%, they let it only get to 11 because people in Belgium really like the number 11. So, we have these retracement levels, but we watch the market. But this is generally our rule, okay? 4 to 20%. Sell at 10% levels. Now, I will say this. You should have your portfolio strategy should be easy enough that you can explain it to grandma, all right? My grandparents are not with me anymore, but here's how I would explain this to grandma. She'd go, well, you're into this Bitcoin thing, right? And I would say, yeah. Here's what we do. Very simple. We, whenever Bitcoin goes down 4 to 20%, we buy. And then when it goes up 8 to 10% from that, we sell. And she'd go, oh, wow, that sounds pretty risky. And I'd say, yep, it really is. But that's why we wear helmets. Whatever. That's how I would explain it to grandma, right? You should be able to do the same thing with your portfolio strategy at a core level. You should be able to explain it to your grandma in a way that they can clearly understand. Of course, it gets more complicated than that. But if you can do that, you're on the right path, all right? So this is what we do. Now, in another video, I'll explain how you look at these retracement levels, how you find these retracement levels, and how to really measure these retracement levels. But for now, this is a good foundation of how to buy. This is why we never worry about where we buy Bitcoin, okay? Because we also do another thing. Let me give you an example. So at the time you're watching this video, Bitcoin's somewhere around this. Let's say that, you could be watching this in a year and you're looking at, wow, 10,000. And it's like at whatever it is, you're like, oh, geez, I wish I could go back and buy Bitcoin at that level. Well, right now we can buy Bitcoin around this level. And this would be a basis. Okay. So we bought let's just use simple numbers right now. One Bitcoin for $10,447. That is our basis. Okay. On that buy. And then it goes down more, right? So we typically buy more as it goes down, as it retraces down. We would buy 2 Bitcoin at 10,217. That's our next basis. Okay. So when I talk about basis, that literally is the place that you bought Bitcoin at. That's what matters in fiat. All right. Oh, but let's say, oh man, this sucks. Let's say Bitcoin goes down to 8,000. That really does suck actually. But let's just say it goes down to 8,000. Or let's say it goes down from the time we bought. Yeah, that sucks. We're stuck in our positions. Well, at this point in time, what we do is that we move our BTC to exchanges to trade alts. All right. It's pretty simple. I'm sure most people are doing this anyways. I think most people don't have a plan though. They're just kind of doing this naturally because it just makes sense, right? Or maybe you're just buying Bitcoin at any level and then you're just moving it to trade alts anyways, right? We're specifically buying on retracements. And if it doesn't hit a retracement or it doesn't go back up to a certain level, we will move that Bitcoin and then we will trade alts with it. Okay. So if we ever get stuck in a position in Bitcoin, we move it to trade alts. Now remember, this comes back to the first session that I talked about. We believe that Bitcoin is going to be worth more than where we bought it. If we ever did not believe that Bitcoin was going to be worth more than where we bought it, we would immediately exit the cryptocurrency market. The second that if I ever get on and put on red sirens and everything else, say we're completely out of the crypto market, that means that we do not believe that Bitcoin will be worth more than it is today. Plain and simple. So that's one way to look at it. So if we're buying Bitcoin, we have a belief that Bitcoin will be worth more than what we've bought it in the future. All right? So that's a real simple, easy way to look at it. So how do we sell? Well, selling it can be as individualistic as you like, but here's how we like to sell, or here's an example of how we like to sell. So remember, we bought one Bitcoin at 10,447. That's our basis, okay? Our goal is to try to get our capital out of the market as quickly as possible so that we're essentially trading with the bank's money is the way to look at it, right? Let's say you invest $10,000 and you get out $10,000 now, and you still have $10,000 in the market. So you made $20,000, okay? That $10,000 that you have left in the market is none of your original capital. So in a psychological way to look at that, you're not going to lose anything from your original capital because it's all capital that you've gained. Now, of course, you will lose the profits you made, but it's no longer your original capital. All right. So what we do is we have target levels, like we said, 8 to 10%. And these are just rough numbers. I didn't get the exact numbers just because, look, I'm trying to share concepts. Okay. I'm not trying to give you exact numbers. It's actually better than this, but let's just say that you buy one Bitcoin at 10,447 and you sell it at 11,596. Okay. So we take profits out. So what we do on some of them is that we'll take out 11,049. Now all you have to do is kind of do the math and say, well, of course we still have 10,447 invested, but how many times do you have to do that to get that original 10,000 out, right? Roughly 10 times or so. It all depends, right? It depends on what happens with Bitcoin, everything else. And it also depends on how you invest in alts as well. But now at this given time, you have a profit of $1,100 or so that you've taken out, and you still have 10,447 that is still invested, looking to maybe take out additional profits, right? Now, there is another way that we do this as well, which is option 2, which is we buy one BTC at 10,447 and we sell it at 11,596, the same number, and we take all of our capital out. All right? So we take out 10,447 and we leave in just the profits to then continue to grow and grow at an additional basis. If we think it's still going to go up, then those profits continue to grow, right? Now you might say, well, why wouldn't you just leave it in? You think it's going to go up. It's about protecting your capital. It's about taking your capital so you can so invest another day, right? It's about capital management. This is still a really risky asset class, right? You don't know. So many things can happen at this given time. So I'm not the one to put everything in and be all in. Some people are like that, and that might work for you. But we like to pull out fiat at regular levels so that we have the ability, if Bitcoin does go down $2,000 from 10,447, well, guess what? That 1149 that we still have in there, well, that's worth less now, but we have our original capital to buy back in, right? So there's two ways that you can look at this. You can do it both ways, or you could leave it completely in. You can do that as well, right? So, but this is the way that we like to invest. This is the way that we like to structure our portfolio at this given time. Now, this also gives you what we call a basis map. I'm sure there's more sophisticated names for this, but this is what I call it. And basically, these are the places where you buy in at Bitcoin, and these are the prices, the ranges. So you have some at 3,000 to 4,000, some at 5,000 to 6,000, some to 6,000 to 7,000. You notice as Bitcoin goes up, typically our basis drops a little, right? 10 to 11, that's because where we're currently at right now, right? So these bases, they drop as our profits are taken out. So we might have some, like for instance, some of the in the 9 to 10 range, we haven't yet taken out yet because we believe there's still a little bit of upside right now to fully realize that profit. But we're really close to some of the basis that we have within the 7 to 8 range and the 9 to 10 that we're going to take those out, right? So this is a basis map. You want to understand, when did you buy Bitcoin and when are you going to take those profits out if you are, right? You might realize that I just want to let it all ride. You might just say, look, I believe Bitcoin's going to go to $50,000, but I'm going to buy at every retracement level, and those are going to be my basis points, okay? For us, we follow our strategy that I've outlined here. All right, is this clear? I don't know who I'm asking, but hopefully this is clear. Now, one of the questions I get a lot is, well, what's your allocation between store of value and alts? Like how much should I have in Bitcoin? How much should I have in alts? My answer to that is it doesn't matter. You're invested in Bitcoin. I know that's a hard and fast rule, but I believe right now the way it's working now is that, yeah, you can do ETH and pairs, but the alts at this point in time are so reliant on the price of Bitcoin. They're so reliant on what Bitcoin does because people are pulling money out of alts when Bitcoin rises. Bitcoin drops. Sometimes people do put money into alts. Sometimes they don't. Sometimes they pull it to fiat and they look to buy cheaper, right? It used to be very symbiotic. It's getting a little bit different now, all right? But it's changing. That's the market cycle. It changes, right? So I've seen every argument underneath the sun about how you should allocate your funds. And there is some truth to like whether or not you should have a large percentage of Bitcoin and then do alts. I believe that if you're in a majority of the alts at all, you have a high exposure to Bitcoin and Ethereum. Just what I believe. So that's the way I look at it. You might look at it differently, but that's my opinion here. The other way that you should start looking at this too is that what's your allocation between store of value and alts? When I say store of value, I mean Bitcoin. Okay? Alt currencies are, and I've shared this in the document, and this is actually from another Reddit post that I got that I mentioned as well, but this is actually a really good way to look at it, right? Which is there's segments of this market, and you want to have exposure to each one of these segments. There's a couple more than this too, but a good way to look at this is that you want to have exposure to these segments because you don't know which segment is really going to take off in this asset class yet. It could be the privacy segment where Monero or Zcash is. It could be the finance segment where Ripple and Stellar is, right? You don't know. It might be in IOTA or Cardano, right? A lot of those are long-term plays. So it's so hard to say at this given time. But when you're looking at allocating your time, your investment capital, you should look and say, well, what are the various things? What do these things do? What do these projects do? And then how do they bleed over? And then if one segment really takes off, then how do I ensure that I have at least some exposure to that segment? And another thing is that if you're invested in all these segments, right, you will get a feel whether or not one segment pulls off because you'll see it in your portfolio. You might say, geez, the privacy segment, every time that Bitcoin drops, this thing just massively, or it goes up 10 to 15%. And that might give you some insight into the market. You might say, well, geez, every time Bitcoin drops, Monero and Zcash, they always go up. They're not always. I shouldn't use the word always. They go up. They tend to go up, right? Maybe there's something inherent in that market segment that I should look in deeper. And maybe I should be a little bit more invested in that market segment because maybe there's something there, right? Actually, I'd say that's the way to look at it. Now, you should track your BTC buys and sales in fiat. That's a given. Of course, that's a given. But you should just think of those buys because that's your store of value. Right now, you can't buy much with anything in cryptocurrency yet. So most people, I know there's a couple extreme examples of people just living completely off cryptocurrencies. For most people, you're going to need some fiat money to actually live life. So you should track that in fiat. Trading. Measure success in BTC trading in BTC. Plain and simple. There's no argument here. All right? You can try to do all the math gymnastics you want. Go ahead, have fun. It's gonna like give you the biggest headache in the world. And I can almost guarantee that no one going through this training is at the level where this makes a lot of sense. All right. Really, if you're investing in alts, in alternative cryptocurrencies, and you're buying those with BTC, your only measure of success is your BTC increasing. That's the only measure of success. And once again, you're going off the assumption that BTC, Bitcoin, is going to be worth more in the future than it is today. So obviously, that's what you're going for, right? So that's really another hard, fast rule. It just makes it so much easier if you just focus on just that. It's real simple. You have one BTC. You bought one BTC. And after 1 month, you have 1.5 BTC. Now, Bitcoin might be worth, when you bought that original 1 BTC, Bitcoin might have been worth $10,000. And then at the end, Bitcoin might be worth, at the end of the month, might be worth $5,000. So, no, you are still down in fiat. But to make it really simple, you just focus on acquiring BTC. Because you, even if at that same point in time, 1 month later, you believe Bitcoin is going to be worth more than that original $10,000 that you put in, then you're on the same plan, or the plan makes sense. If during this month you feel that Bitcoin's never going to be worth more than that original Bitcoin that you put in, then you should exit the market completely, because it wouldn't make sense, right? Unless you could make substantially more to make up for that win Bitcoin or that $10,000 that you put in, right? So, I mean, this is a given, but there's been a lot of conversations I've seen with people like that, kind of trying to figure out what was Bitcoin when I bought this, and am I down in fiat? Go ahead, try to figure that out. It's a complete waste of time. Your only thing to think about is Bitcoin going to be worth more in the future, and do I want to acquire more Bitcoin? That's the name of the game. And of course, an ETH. We've been trading a lot more ETH lately, just because it's a little more stable. And some of our investment returns have been better in ETH pairs than it has in Bitcoin, because some of the alts are so impacted by what Bitcoin does. Sometimes the ETH pairs don't react as much. It's kind of an interesting thing to watch. All right, so now we're going to get into the mechanics of how some of this works. And keep in mind, this is the first video, and I know this has been long so far. I'm sure that hopefully a lot of this isn't new. Some of this might be new, but what we're about to get into now is the exact mechanics of how this works. So the first strategy that I find works well in the crypto market is swing trade free coin strategy. And how this works is you buy on downtrends. Okay, so when the coin is trending down, some people like to say buy the dip. I do not like that phrase, because if you buy a lot of dips in today's market, the way it is, you are still down, and it keeps dipping and dipping and dipping. So what dip are you supposed to buy, right? So I suggest buying downtrends, and we'll get more into this as the training goes on. But once again, this is foundational stuff. Targets are 10 to 15% exits, and there's a specific reason why those targets are at that level. That's because what you want to do is you want to exit 80 to 91% of your position to get your capital, or your BTC, back, okay? So you're buying on downtrends, you're targeting 10 to 15% exits, and you're looking to exit 80 to 91% of your position. Once again, these numbers, they can get very more specific than this, but I'm just giving you a high-level overview. This works. The math works pretty well if you kind of stick to this, I should say. That means 9 to 20% of your BTC is tied up. It's profits. It's in there, right? It's free coins. And I'll give you an example of this. It won't be exact, but I'll give you an example, okay? And then what you do with those free coins, so to say, they're free because you've got your original capital back, right? So now you just have those coins that are sitting there, and when something moons or something goes crazy like it happens to in the crypto market, we're doing this in GVT right now, and BCPT we did a while ago, but I can probably list 5 to 10 to 15, 20 more things, if not more. Is that eventually, for some reason, these things just moon. And then when you see that happening, like GVT, it might have a lot more room to go. I have no idea. But we've been selling a third of our coins as it keeps stepping up another level, because eventually it's going to come back down. Eventually it's going to find some kind of base. And so we're just, as we're up 60, 80, 120%, we're selling those coins, usually a third of what those coins are. And of course, sometimes we're buying in as it going up as well. So we're still participating. So, but what this allows you to do is to kind of constantly have a BTC level to invest into stuff, and then not keep that full capital in something you don't know when it's going to actually go to that next level. Sometimes it might be weeks, sometimes it might be 2 or 3 months. You never know, especially in this market the way it is right now. So this is a good strategy. And I'll give you an example of how this works. Let's just say NEO, okay? And the numbers are not accurate to like what you can buy. I just want to keep real simple numbers to make it really simple, okay? Let's say you buy 10 NEO for 1 BTC, all right? I know that's probably way overpriced, but it goes up in value, and then you sell 9 NEO for 1 BTC. So you got your Bitcoin back. You bought 10 NEO for 1 BTC. Some point in the future, you sell 9 NEO for 1 BTC. You got your original Bitcoin back, your original capital back. You still have 1 NEO there and your profits, obviously, right? And then you have 1 NEO left at some point in time. When NEO moons or goes crazy, maybe it never does. That's the other risk you have here, is that maybe NEO never really does. You kind of have to detach yourself from these free coins a bit, because sometimes it takes a while for them to get there. Sometimes they just stay right where they're at. Sometimes they're below. So there is a little bit of a risk in this. Obviously, if it goes up and you take out your profit right then, you've got your profit right then. That's the safest way to do this, okay? But with this, you get a lot of the upside, right? And you have your original BTC out. So, and then when NEO goes up, sell 0.5 NEO, right? Sell 0.3 NEO. When it goes up, maybe you see all of a sudden you get up one day and it's 70% up from where you bought it. Well, that's a good time to like say, hey, I think this thing might be a little overvalued. I mean, for some reason, there was news about it. Like this happens with XRP, Ripple a lot. Every now and then, something is going to happen with Ripple and it goes crazy, right? And people buy it up and then suddenly, oh, that was a rumor. It happens a lot in the crypto market, right, nowadays. So at that point in time, if you had Ripple, like we did, we were selling Ripple on that rise because we didn't know if the rumor was true or not, but it was substantially up from where we bought, right? So that's the way to look at this, right? You never know. It's always good to take profits. Another strategy that works well is dollar cost averaging swing trades, all right? So you buy on downtrends, the break of what we call bases or support, right? And then you're analyzing this asset where it's best to make your buys. So you're already analyzing this. So you want to get into ZRX, or you want to get into Wabi, or you want to get into NEO, whatever it is, right? So you've analyzed this and you say, okay, well here, if it breaks this price point, then I'm going in, right? And what you do is you buy at those price points and then you sell at key profit levels. I mean, this is given, you probably understand this at a core level, right? But you're basically dollar cost averaging your way into an asset on downtrends, okay? So if NEO goes down, you say if NEO goes down 20%, I'm buying X amount of, BTC worth of NEO, right? And then if that goes up 20% from your profit level, and I'll give an example of Stellar, right? So let's just say Stellar, so I won't just keep talking about NEO. You buy Stellar on a 15% downtrend, all right? So you just notice that Stellar, it retraces back every couple weeks or every week or something, 15%. Okay, great. I'm going to buy at 15%. And you sell some of Stellar at 20% profit levels just because you want to take some of your profit. But you're selling some. You're not selling all, right? So you're selling some at those pre-profit levels, and then maybe it retraces back 10% down from where you sold it, right? And then you might buy more from that profit that you already sold, right? So you're kind of dollar cost averaging your way into an asset, is the way to look at it. Once again, I'm talking at a high level here, and I'm intentionally not giving you like plans because this is so specific to how do you want to do this. But this is capital management. This is planning your trades. This is looking at how you're trading and really thinking about this systematically. What's the best way? Most people will just say, I want to buy Stellar, and they'll go buy Stellar. And that can work, and it works pretty well if you're just going to sit there and hold. So if you're just going to sit there and hold, but I'm designing this training for people that want to trade, okay? So obviously, if you see something that you think is hugely undervalued and you have an opportunity to buy into it at an undervalued price, then you would want to buy into that at an undervalued price and hold it because you feel that there's a tremendous upside. But if you're not sure, which a lot of things in the crypto market are not sure right now, you can really buy in intelligently by downtrends and then selling it some at profit and then buying back in if you still believe in that, right? At least take profit along the way. So this is one of the ways that we like to do it as well. Now, the other trading that you might be able to do are day, scalp, and short swings. Okay, this is for if you have the time. Not everybody has to do this, and maybe you're not built to do this. We'll get into this in the next session. But one of the things you can do is you can day, scalp, or short swings. And this is where you buy breaks or breakouts. And your target exits usually is 3 to 7%. Sometimes you can do a little bit better than that. It all depends on what you're trading, the time of day, and a lot of factors. But 3 to 7% is usually a good target. And then you're going to exit 95 or 100% of that position typically, because you're not buying at a really good rate, and your exits aren't really at a high profit level. But these are what are called account building trades, meaning that, look, if you can get in to something and you can do 4 or 5 trades and you can do 4 or 5 trades and you can make 3 to 5% every day, and you could do that, let's just say, you're building your account. You're slowly building your account, right? And that's good. Slow is good. There's this concept of turtle trading, and I think it's a great concept. Even people call themselves turtle traders, where basically you're just slowly building your account. You're slowly building. It's one of the best strategies. Is if you can just consistently, slowly build your account, eventually it's going to be pretty big. It's, the compounding nature of everything, and just if you can do that consistently, it's a very smart strategy. Remember, this is about consistently and reliably pulling capital from the market. That's what we're talking about here. So if you can consistently build your account in a strategy like this, you're doing pretty well, right? I mean, that's the way to look at it. That's one of the ways to look at it. So that's what I would suggest, is definitely look at it that way. So once again, with these things, you sell a 30-year free coin. So if you do exit, like a lot of times we will do this sometimes as well. We'll do our day or scalp or short swings, especially if we're buying something that when we look at the daily chart, it's at the bottom of where we think the price might be. We always assume it's going to go lower, but let's just say that it does happen. We're buying at the bottom level, given the market. We might still exit at 80% or 91%, and then just let some of the, we'll look at some of those as our free coin strategy, even though we only targeted 3 to 7%. So of course we have more of our capital still in the trade. We don't have any profit really. So that's another strategy you can use as well. Keep in mind, if you're doing that a lot, you're going to have to then fund your BTC trading more, right? So a lot of times, if you're doing the first strategy I shared here, you don't have to fund you don't have to fund your BTC as much if you're doing good trades. If you're consistently doing good trades, then you're exiting at good levels. Then you have these kind of quote unquote free coins that you can ride up to these higher profit levels, right? So that's something to keep in mind. This is another strategy that works pretty well in this market at this given time, and has traditionally worked, is that you invest in new assets, right? Encash, Tel, there's a lot of them, right? And you put $20, $50, $200 or so, could be more, depends on your level, right? and you put them into these projects that you believe in, that look promising, and a year down the road, if they're worth 2 cents now, maybe they're worth 40 cents in a year down the road. And then you go back and wish and say, look, I wish I put $1,000 or whatever it is in that. You never know. Some of these things completely go away. Some of these things never move. You just never know. Okay. So but it is good in this market. One of the members of this group here, when he was in early, he put his money in just about anything that he found interesting, which was basically about everything. So he found things like from Doge to whatever coin out there you can name. He probably has a little bit of it, right? And that strategy paid off well early. I think it still will do well in some of these assets. You just never know. So you can't do it too much because obviously you're spreading yourself too thin, and some of these things just go nowhere, right? So it's something to also consider. But you might find something that seems really interesting, and you look at the team and you look at everything else, and you're like, well, it's at 2 cents now, and I mean, even if it goes up to 5 to 10 cents, this is still a decent investment to get into. So that's something to consider as well. You want to watch for new projects. So this is a given. And then when you see, one of the good things about this as well is that if you kind of look at these new projects and you look at them as asset classes as well, and you're invested in these, well, you would be invested in them. And then what you would do is that you see something running, you would then maybe go and invest more, right? Because you'd say, well, geez, this is starting to run. Maybe there's something here. Maybe you look at the announcements and you look at kind of where they're at in the project, and it's actually they've really leapfrogged above the competition, and they're really doing something. There's something really happening. Well, you're already in. You already are watching it, and you see that price spike a lot more than someone else just because you've been in since day one. Or maybe because you're in this stuff, you do see it slowly tick up. It's slowly ticking up. And as it's slowly ticking up, it's getting more on your radar, more than someone else, that more than the market, I would say, because they're not invested in this, right? They don't have their capital in this. So they're not looking at this from that perspective. So that's another good way to look at it. It's another smart way to kind of get into this stuff. But that's another way I would look at this as well. All right. So it's another good way to kind of start looking at the market. It's another opportunity. Also, in some of these things, you're in other exchanges from the more trusted exchanges. So that's another thing to keep in mind, is that your assets, your BTC, might be in other exchanges that aren't as nice to work in, that aren't as, it's hard to say with trustworthy in the crypto market, but aren't as trustworthy as some of these other exchanges, right? So that's the other thing to consider. But this is another good strategy, okay? Now, let's just use an example of $1,000. All right, let's say you have $1,000 right now, and you want to get started. The first thing you should do is just follow the BTC buy retracement strategy. Okay, buy and downtrends. That's the best way. And the lower the downtrend, usually the better the buy. Right, that should be obvious to anybody that's been watching BTC for a while. And you want to buy 1 or 2 positions, and don't try to time the bottom. But the lower it goes, typically the more we increase our position is the way to look at it. So when something goes lower, we do buy in at a lower level, and then and move that BTC to alt trading, and really focus on building BTC. That's really the name of the game when you're moving to alts. Now, you could also just move that to alts and then get into the alt coins that you believe have a longer upside, and just maybe you say, I'm going to invest $1,000 a quarter, right? Whatever the number is, you might say $10,000, whatever, it doesn't matter. And then just systematically identify the positions that you want to enter, but you're entering Bitcoin at a good basis, right? And then you should always keep fiat on hand for the next dip. So if you're going to invest $1,000, buy 1 or 2 positions, and don't assume that you've bought the bottom, but then buy Bitcoin, keep fiat on hand so that you can buy more if it does go down, which it tends to like to do, right? Bitcoin tends to like say, oh, we're at the bottom, and then all of a sudden says, no, we're not quite at the bottom, right? Well, then you at least have another buy-in, right? So don't, I suggest don't go all in with Bitcoin unless there's some, I mean, unless you want to, that's your strategy, but usually it doesn't pay to go all in with Bitcoin unless we're at a very low level that it's just, it's so insane that it's got to go up from there. But even then you don't know. Right now, the market is so, a lot of people that are in this training, you don't have the historical knowledge of the market. And one of the things I haven't mentioned yet is you should get the historical knowledge of the market. You should, any market you ever enter, in whatever professional capacity, even unprofessional, even if you're just doing it for fun, you should understand the history of that market. A good example is copywriting, okay? If you don't know what copywriting is, I don't assume everybody knows, but copywriting is the ability to basically persuade and sell through words, okay? That's copywriting. There is a rich history of copywriting, right? So when you start to learn how to copyright and how to write emails or how to write advertisements and all that other stuff, if you will go in and study the history of the copywriting market, you will get so much knowledge. But many people just start with today. They don't look at the history. You should do that in this market. You should look at the history of the market and really learn the history. You're invested in this market. You're not just someone on the outside. You're a participant. Know the history of the market. That will also help you inform your decisions going forward on what are the possibilities of this market, right? So that's another way to look at it. So look, I know this is going on. This is probably an hour long, if not a little bit more. And the goal of this is to really get you kind of introduced to this. We'll be revisiting a lot of these concepts, and of course you can ask questions. But you should be rebalancing your portfolio at least monthly. Weekly or twice a month is best. What I mean by that is rebalancing basically means is that you look at your positions, you look at the opportunity, you look at the market, look at what you've learned, and you say, am I invested right? Do I have the right investments? Is there something I should move around? Should I sell something? You know, is NEO no longer the smart play in this market? Is Litecoin really not going to move, right? Is Stellar not the one that actually has a long-term potential? Or reanalyze your profits, right? These are things that I think, yeah, you might watch your Blockfolio or other stuff every single day, and you might say, oh, I'm in the red or I'm in the green. Awesome. I'm doing great. Well, yeah, but that's good for a week-to-week type of thing or a day-by-day thing. But when you think about a year out, or you think about 6 months out, or you think about, 2 years out, are you positioning yourself in the right way to maximize your profit, to have maximum opportunity? Or are you overexposed in something, right? Do you have too much investment in the infrastructure space, right? You should always be looking at that and rebalancing your portfolio. Now, as far as the free coin aspect of it, we don't even look at rebalancing. We just look at that. We look at those as somewhat account building, but we also look at that as it helps us keep a read of the market, right? So since the trading that I do, right, is I don't think a lot of people will be able to do because this is what I do, right? So you shouldn't try to trade like me, but you should. I think there's a lot of these concepts that I've shared that you can adopt yourself, right? So we have a lot of exposure and a lot of coins, but I'm also trading those coins, right? So. And we also have core holdings and everything else. So we'll get more into that as well, but you should always rebalance your portfolio at least once a month at a minimum. And that means you're focused on rebalancing, okay? You sit down and you say, okay, I'm going to rebalance my portfolio. That's what you do. So it's not you just kind of dabble at it. No, you seriously look at it and you look at your positions and you start thinking, analyzing it, and making sure it's the right move for you in the given time, the short, mid, and long-term plan that you have. Now, this is probably the worst time to cover this because hopefully you're not worn out, right? Hopefully, hopefully I know I've covered a lot of things here quickly, and I think a lot of people that are here, you get a lot of this already. So hopefully this is there's value here. You've learned something new, but I know for some people this might be a lot of kind of new stuff or new concepts, new thinking. Simply put, alpha is the measure of an investment performance compared to a benchmark, okay? Such as the S&P 500. Now, there's no real benchmark yet in crypto. There will be, if there kind of is, but not really. But it's a mathematical estimate of return based on usually the growth of earnings per share, okay? I'll get into the real example of why this is important, right? But beta is based on volatility. It's based on the ups and downs and everything else. But beta is compared to the benchmark, okay? And you can think of beta as the tendency of a security to respond to swings in the market, right? So the reason why it's important and the reason why you want to think about this is it's also opportunity cost, okay? So you can do more and more research in alpha and beta if this interests you. If you want to consider this, I do think you should consider it, right? Because the smart money does consider this, okay? So it's not something that I'm just pulling out of the air and just making up. But here's a good example of alpha versus beta, how you should look at this, is if you put $1,000 in Bitcoin today and you did nothing but you didn't touch it at all, right? You just put it in, right? Do you have more return in fiat by doing absolutely nothing from investing in alts? Meaning that you just put $1,000 in BTC. A year from now, do you have more in fiat than if you put it in alts, right? This is very simplistic. It doesn't get this simple, but basically. And the other thing that you want to ask in an alpha versus beta question is, does your alt portfolio outperform the alt market performance? Okay. I know this is like heavy stuff for the end of kind of where we're at here. It's real simple though. If instead of doing a lot of work, could you just invest in Bitcoin is one question to ask. And will you have exposure to this market? The other thing to ask is all the time that you spent in alt portfolio building, right? Do you beat all of the alts combined, the average return of all the alts? It's kind of hard to say. You could say the top 100, the top 10, whatever it may be, right? Ideally, what you want to say is that, yeah, I could invest in an index fund, so to say, and these will start popping up. And they're already starting, they already exist, but I can invest my BTC in an index fund of all of these top 20 alts, and I will get X amount of return, right? Or I can spend my time and I can beat that index fund, right? So if that index fund returns 20%, then, and I know it's hard without showing the numbers here, but I'm just talking concept, right? So if that index of the top 20 alts returns 20%, but you are able to then take you're able to return 40%, you've beat the index. You've beat the beta. Like I said, I'm introducing you to the concept. We could go through the math rabbit hole of everything and really go down that, but it's not necessary. It's something to consider, right? I don't know if many people have considered, which is like, well, what if I just invested $1,000 in BTC? Or is my alt profits, are they beating the overall index of all these alts, right? These are some things as you get more sophisticated, you'll start thinking about, because it's about money management. It's about capital management. It's about investment management. It's just, once again, I'm not trying to overwhelm you with concepts or anything else. I'm just really trying to introduce you to some of these concepts. All right. So here's the portfolio exercises you should immediately do. Create a written, clear, and concise portfolio strategy you can explain to grandma. So that's the first one. So create a portfolio strategy where you say, look, grandma, I invest in the cryptocurrencies that help people with privacy. And there's 10 to 15 of them that I think are really good. And I pick the top 5. And those are the ones that I buy every month, right? And I buy when they go down in price. Simple, right? You want to create a clear, written, concise portfolio strategy. And there's an intentional reason why I say written, because writing puts it in stone, so to say, for you, right? You can type it, that's fine, but it should be something that is you can easily follow, right? Here's the other reason for this, right? If you have a clear plan, you can always go back and say, oh yeah, my plan works, or you can start tracking your plan. So for instance, if you say, I've analyzed Zcash, and every time Zcash goes down 12%, I should buy. And then if you do that after a month or couple weeks, you can go back and say, you know what? My original analysis of this, I actually am off. I should be buying at 15%, right? Without that plan, you won't know. The other thing without that plan, you will always be wondering if you should buy something. If you don't have a clear written plan, you don't know if the market conditions will support that, but you'll be always wondering, where should I buy this stuff? Of course, there's technical analysis that goes on top of this and everything else, but I'm just saying, having a plan will put you a step ahead. It's one less kind of consideration. It's one way to get a lot of your fear and greed out of the market, because you've created a plan that you believe in that you can then track. All right. Now, once you've put it to the level that grandma can explain, then you want to make it a little bit more complex, okay? Because obviously you're investing and you want to know the exact numbers. You want to know the exact profit levels. So you want to make it a bit more complex. But once again, the harder you make it, the more difficult it will be for you to go back and track the success. So I always try to make things really simple, really easy, because the more complex you make it, you've got to have the systems and everything in place to make sure that you can track that complexity. So, but generally you want something a little bit more than you can just explain to grandma. Okay. There needs to be a little bit more heft behind it. And this is majorly important. I haven't discussed this yet, but it's hugely important. And I believe if more people did this with just anything in life, they would get more things done. And that is, put this in your schedule. Literally, if you do keep a schedule, and a lot of people, if you have a job, you have a schedule of meetings or something else, but in your passions or in even, you could say investing isn't usually a passion, but it's something you're doing to build wealth. You should put in your schedule time to review and rebalance. And when you do that, your phone goes off. Everything goes off. And you have in your calendar time to review and rebalance. This isn't something you just kind of, once again, if you just kind of leave it to whenever you feel like it, you're going to do that, it's going to get half done. The best way to do this is you literally put time in your schedule and you say, I have a rebalancing meeting with myself at 2 p.m. on Tuesday. And you rebalance your portfolio. You look at it, you go through the analysis, and you really study it. I'd say that that's another big tip I can give about doing this stuff, is that for some people, they haven't even done the first part. And the other part is to actually get it done, put it in your schedule. And don't break your schedule. Just like you wouldn't break if you had a very important meeting, right? You need to treat these things like they're a very important meeting. They're critical. That's the best way to start looking at this stuff. So I have no idea the length of this, but I'm sure it was a lot longer than I intended. And I know I have a lot more follow-up here to give more clarity to some of this stuff. But hopefully this is clear. If there's any questions whatsoever, do not hesitate to ask. My goal here is not to overwhelm you with too much information. It's to give you a really starting point to get started on this stuff, and especially if you're not doing it. If you're already doing some of this, then great. But I think many aren't doing some of this stuff. And of course, we'll get into more details. So I look forward to seeing you in the next session. And once again, if you have any questions, don't hesitate to ask.